Should I go in?
Ma'am, should we start now or we should wait for another 5 minutes?
Please start. Fahad, please
Okay.
commence.
Okay. Himanshu.
It is rightly said that plan your next move because every step contributes towards your goal. Good evening, ladies and gentlemen. I, Himanshu Nelwal, on behalf of whole IBS Pune, takes the privilege of welcoming our respective delegate, faculty members, and students to this exciting event. An investment in knowledge pays the best interest. Set in the city known as the Oxford of the East, IBS Pune has lived up to the reputation of the city by providing world-class management education. We all students of IBS Pune feel proud to be part of this great institute. The Research Club is one of the most active clubs of IBS Pune. The club has organized many events digitally last year, irrespective of the pandemic. And now, we the member of Research Club are back with yet another fascinating event, panel discussion on future of crypto asset in the Asia Pacific region. Cryptocurrency. Cryptocurrency has become a trend in the modern world of digitalization. Virtual currencies like Bitcoin, Ripple, Ethereum, and many more are spreading their wings with each passing days, and the physical payment system is turning out to be virtual with high speed. Crypto is a digital asset designed to work as a medium of exchange, which are generally backed by strong cryptography for secure transaction. To ponder more light on this topic, let us first welcome our speaker, Mr. Joel John. He is a mechanical engineer with an MBA in operation management from SIOM. He is working on supply chain project at TE Connectivity to improve supply chain operation and drive digital initiative. His pre-MBA experience in home appliance and LED lighting industry in sales and service operation. He invests in fintech-oriented blockchain firms while Ledger Prime. He writes words and publishes chart at cipher.subtract.com. Now, talking about our second panel member, Mr. Naveen Surya, who is also a speaker. He is an advisory board member at Blockchain and Crypto Asset Council at IAMAI. He is a payment and fintech industry leader, advisor, board member, investor, and mentor. Now, moving on to Mr. Sudhar Durba, who is our moderator. He has an 8 year of experience in financial risk management and technological risk management. He is currently an Associate Digital Director of Cybersecurity at KPMG India. His area of expertise is finance, technology, digital risk management, emerging tech, crypto asset, CBDC. I heartily welcome all the people present here who give their precious time to be part of this event. Now, I hand over the event and request our guests for whom we have gathered today to enlighten us with their expertise. Over to you, sir.
Thanks a ton, Himanshu, and a very warm welcome to our guests today. So we have got Naveen Surya. I think you didn't do enough justice to his experience. I think right from NPCA to others, I'd heard a lot about you, sir. So thanks for joining us in this meeting. Joel, always a pleasure connecting with you. So thanks for joining, and welcome to all the guests from IBS as well as all the bright minds from IBS. So welcome all. So the topic for the day, as you've seen, is an interesting one, especially given the trends that we're looking at in the sector, be it crypto or digital assets. It's going to be an interesting let's say the first 30 minutes is where I would want to interact with the guests, Joel, as well as with Naveen, in terms of what are their thought processes on crypto, digital assets, what's happening in the space, getting to know this a little bit better. And the last 30 minutes is when we would like to open up for questions and queries, or I will play the role of a quiz master if I don't get enough questions. So we want this to be interactive. So Joel, Naveen, welcome. So we probably want to start off with what are your thoughts around crypto assets, digital assets, uh, let's say separating the myth from the reality here. If you want to start off with Joel.
Sure. I'll go first. I think just one small thing to clarify. I haven't worked in the supply chain space at all. I think Himanshu may have mixed up the LinkedIns a little bit. I've been mostly in the venture capital side for most of my career. So yeah, just clarifying that. I think, yeah, no worries, it happens. So I think, when it comes to crypto assets in Asia, there's two sides to think about it. One is as an evolution of the internet, and the other is as a financial asset.
Your voice is not clear. Your voice, it's not audible. Is that correct? Others, can you hear it?
No, ma'am. I think it's clear.
Is it clear? Do you need me to replace the mic?
No, sir, you're audible. You're audible.
No, I think you're audible, Joel. You can probably go ahead.
Okay, so I think sorry, ma'am. I hope it fixes for you. Yeah, I think there's two sides to it. One is as a financial asset, and the other is as an evolution of the internet. If you look at things like Bitcoin, Ethereum, the vast majority of narratives around them is as a digital currency or a commodity that can be invested into. So, around 2015, 2016, even in the US, among regulatory bodies, they were looked at as digital commodities. Now, since 2017, with some of these digital currencies being programmable, the kind of applications that can be built on them has also changed. So what we see with things like NFT, things like, applications where you can distribute earnings across a number of people, all of these is emerging business models that are more related to the evolution of the internet. So in Southeast Asia, because the fintech ecosystem is actually so good, the key use case is generally not payments, in the sense that I don't see Bitcoin or Ethereum being able to replace, let's say, UPI. But people do see this as an investable asset. And that's why we have seen record volumes, at least on the exchanges, in terms of investing in some of them. But I feel the larger opportunity for a lot of young folks is to actually see what can be built, what unique businesses can be enabled by this new technology stack. And focusing on that is likely where the big opportunities lie for the next decade, because competition is still very little.
Thanks for that, Joel. Naveen, probably your thoughts on what's happening in the market right now. A lot of people do confuse, let's say, crypto assets as an asset class and blockchain as the only thing related to DLT or distributed ledgers. But there's a lot which is happening in the banking sector in terms of investments, or let's say securitizing bonds or others in the form of digital assets on the settlement side. With your background from NPCI, when Joel says that not so much on the payments front, you're actually seeing a lot of work which is happening around payments with, let's say, CBDCs, as well as the lot of even PwC, one of my competitors, has recently taken, let's say, their professional fees in the form of Bitcoin. So your thoughts, please, Naveen, in terms of what's happening in the market.
So one clarification, Siddharth, that you probably confusing PCI and NPCI, while I've been associated with both. PCI is Payment Council of India, which is the digital payments industry body, which I chair, and now I'm a chairman emeritus. I was also part of NPCI's Innovation Council, so that's where probably both the name would have come in. So anyway, keeping it aside.
Yes, please.
Yeah, so let me first go into that. Why are we even discussing crypto? Of course, it is because of the hype it is, but what is the real importance of it? And I think Joel touched upon it in some ways, that it all started with internet age and then it's moving into crypto age. But I would like to say that if you look at fundamentally, how does the civilization progress, right? I wouldn't go into too much of detail of it, but you would have heard very early days from a wheel moving certain things to a steam moving certain things. Each of these were phases of evolution for the industrial development or a civilization development into different era, right? From a steam, then came the power, then came the whole digital internet technology. We are probably at a stage where the internet is now at a stage where it's kind of completely fructifying what it can do. What we call from a digital convergence era, which you saw that what a digital can do by integrating various aspects of your life in society. Because fundamentally, it's all about how the society behavior, technology gets married, right? And then from there into a digital economy era, So crypto, the development of the crypto has actually to create that impact of a digital being at the level of entire economy, not just at the, let's say, at the basic commerce, basic payment, but now everything is getting integrated. So the way today, probably a couple of decades back, we talked internet. I think some of us were early days dial-up connection guys. So I mean, we couldn't have imagined the kind of OTT platform that are there that will it ever happen, right? But it's happening. So today we are seeing the probably maximum advantage of it. So the way the internet democratize the information, access to information, let's say communication, same way, how does the entire financial services, and of course the crypto is not going to just impact financial services, but entire industry, but we'll come to that later. We'll focus for today's time mostly the financial part of it. So it's going to impact the entire financial services the way internet has impacted everything else. So we need to first keep that in mind. So again, if you look at from analog to digital, digital to quantum, which is yet to happen as the silicon gets further changed as a era into a different era. So we are in that transition and a last leg of that development where you will see the complete matured impact of what an internet can do. So the way you have democratized, like I was saying, media to communication to information, you're going to democratize the financial services using something like a blockchain combined with cryptography. Now, again, fundamentally, somewhere you always see a technology and believe that is the product. No, I think ultimately we as a consumers, we consume certain services, and the way you consume with every new technology coming, it changes. To give you a simple example, there was a time a stock exchange. I mean, I'm sure some of you would have seen some of the series and you would have seen how the trading was happening, right, in a ring. And we've seen some of those era. I'm probably as old to see that earlier era or being at least aware of that era, which used to take probably 5 to 6 days of settlement, to that to three, and then now two, and then now it's literally one. But you talk about crypto as you're talking about the instant real-time settlement. So your fundamental transaction in a stock market for buying and selling in security, or it could forex or anything else, has not changed. But the way you do every time a new technology comes, if it brings also, I would put one fundamental for the students' benefit that what a technology does. I mean, it does only two things. That's how I've learned fundamentally that any technology you bring only does two things. It reduces the geographical distance, and it kind of reduces, or rather, it increases the speed of actually how you could do things, or let's say the time taken in doing things. Now, any new technology that comes, including crypto and a blockchain combined, it are actually doing it. At the same time, it is adding a democratization into it by being a distributed architecture. So again, if you see fundamentally, you had early days of a computerization where you had a client server technology, which means you had a master and then a slave. From there, you went into a internet kind of environment where everything was centralized. There was a single server everybody was pinging to, and all your transactions were happening real time and getting recorded. Now, suddenly you're saying that why that single source of truth or authentication has to be, why you have to depend on one. If somebody changes that, somebody plays mischief there, then everybody's life, whoever is depending on that, could be under risk, right? Or it could be under suspicion. So can we decentralize those authentication protocols? Can we have multiple parties where this data is available, and whoever basis certain algorithms, you actually ping for those authentication randomly, any of those, so nobody can control this. You suddenly have a decentralized system which is away. I mean, so again, these are fundamental things around what is happening in crypto, blockchain, and how it will impact. And because of that, you're seeing a lot of changes going to happen. And now I will talk about fundamentals, because these terms are getting interchangeably used, and they're not same. So let me start with money, right? Money is not currency, and currency is not money. In the early days, we learned that anything that you could use as a medium of exchange is money, right? Which includes checks, cards, wallets. There are many such things, even a coupon. But it does not have a legal tender, which means that a backing of a government, which means that if you don't accept it in a country where it is backed or where it is kind of produced or issued, you actually have committing a crime. You could actually be put in a jail. For example, if you go to a retail store and you say, hey, I would not accept Indian rupee as a payment option, you could actually go and file a suit against that, or you can take a legal action. But he has to legally accept it because it has a legal tender. You can't say that I wouldn't accept it. Now, here, the money and a currency, and the fundamentally when something like Bitcoin, which started with a combination of blockchain and a crypto, tried to create a democratized currency for the whole world, where actually nobody is controlling it. Because fundamentally, what a currency needs: a store of value and a buyer and a seller who is willing to accept it, or a two-person who's willing to accept it. I mean, that's why you even found probably a tea wala giving a coupon in absence of a chain, and you're okay with it. As long as people are accepting it, it is fine. It may have a backing, no backing. Fundamentally, even today, the currency that exists, other than the government backing and a guarantee, it is a fiat money. It doesn't have a 100% asset. So when a blockchain and a crypto came in a form of a Bitcoin, it named itself a currency, and which is where a lot of attention from our regulators and a lot of governments started happening. But this is a control, this is power. The moment somebody says that I am a currency and I can displace your regular currency that you issue, it's a power that you have. Today, every country has a law where currency can be issued only by the government. So actually that comes into a conflict there. And that's where I think of late, the remaining development that started, if you see, most of them are not calling themselves a currency. They will call them utility token like Ethereum, etc. They will call themselves NFT. They will call themselves stable coins, which is actually packed to a dollar for a fixed value, but it's just the easier way to transact, right? It is more democratized. It is using a technology of a blockchain and a distributed ledger, so that you could use applications where, again, fundamentally, how do you deliver transaction fast? And again, like I said, fundamentally, this technology delivers you that if you want to transact across the boundaries, you could send money real time in multiple applications without worrying about the exchange rate, without worrying about the time. How do you bring real time transactions across these boundaries? That has been the fundamental. And how do you make it as a democratized beyond, let's say, government control and become a global product? So again, a difference between a currency which is probably unique to Bitcoin, assets or a utility tokens within that, or rather private cryptos within that, you have multiple varieties. I think Joel has touched upon some of them. Fundamentally, you could call all of them asset class. Some of them are asset class, some of them are proxy for a probably just an evolved version of a, let's say, you could say the same currency that the government issued. The last bucket is the government issued digital currency, CBDC, central bank issued digital currency, which is nothing but a digitized format of the same fiat currency that you have. And again, there are advantages when you use a certain technology with the same currency that we all draw. We'll probably get into it as we get into more questions. But these differences has to be understood. And because of that, like you said, whether banks, whether payment networks, each of them are going to be affected positively as well as negatively. Those who respond and adapt them well to remove those obstacles, manage the risk well, and deliver that, let's say, speedy transactions, real-time settlements, again, lesser cost, will probably immensely benefit in the ecosystem. So these are my very macro earlier views. I've not gone deliberately into the specific question you asked, but I wanted to put this fundamentals first very clearly, because all these terms get used very interchangeable and each has their very different implications.
And you rightly mentioned that, Naveen. I think the macroeconomic and the potential factors that you just mentioned does make sense. It does set the context for a lot of people might have been using the terms interchangeably, but probably drawing your attention to the way that the crypto assets of the digital space is being, let's say, monitored or regulated today. There's increasing regulatory scrutiny across regions for the reasons that you mentioned. People don't want to lose power, as what Naveen mentioned, in terms of minting money, or let's say fiat currency is the right term to use, like Naveen mentioned. But specifically, Joel, given that you've been seeing a lot of, let's say, startups, fintechs in this space, do you believe that we are actually losing out in this space, given that there's no clarity of the regulatory regime that we have? While there are talks about the new crypto bill and others coming up in the space, what are your thoughts on the regulatory scrutiny which is happening here? My point of view has been regulation is required, given that there's been a lot of focus on using Bitcoin for across, let's say, not only Bitcoin, any other crypto assets, if used without any controls, does open up a can of worms from an anti-money laundering perspective to other areas. But broadly speaking, what are your views in terms of the regulatory scrutiny that many of the exchanges are facing in the entire ASPAC region? Joel?
Yeah, sure. So I think there's multiple sides to it. I think, Naveen, it would be good if you can just shed light on how payments regulations evolved in the early 2010s, especially with UPI and like. But I think coming back to this specific question that you asked, I feel keeping the exchanges aside, there is a human labor risk involved, in the sense that if somebody is working in crypto, there's always this concern of, will this be banned tomorrow, and will my reputation be damaged because of that? Because anytime I tell someone that I'm working in crypto, there's always that question. I think that what that means is a lot of bright, smart people that could realistically be building great firms in India, likely stick to other things instead of coming into frontier tech. And that's not what do you say, just related to crypto. It can actually happen with drones, AI, all of them. The more sophisticated the technology gets, the regulatory clarity is just not there, and that stops people from starting new firms. So that is one. Second is the brain drain effect, and at least in the late 2010s, early 2020s, it's playing out in a different way, where people don't move abroad, but they have firms abroad. So I know a lot of people in crypto who have firms registered in Dubai, Singapore, not with the intent of tax evasion, just because they need to make sure that their firm is protected from the government's scrutiny, right? And that's happened even in e-commerce, where I believe Flipkart was registered in Singapore, if I'm not mistaken. So what happens is people work in India, but the capital is accrued abroad. And you could make an argument that the tax income that the government could have potentially made on that is practically just vanishes, right? The third argument is that incredible organizations that could likely contribute to crypto right now, for instance, the universities, research centers, stock research platforms, all of them pretty much stick to the sidelines. And that has actually created more harm than good, because instead of looking at these as financial assets, what they have become is meme assets, in the sense that people get misinformation from TikTok, they get misinformation from Twitter, from the wrong people, they're putting their life savings, trading on margin, losing massive sums of money. So there is no focus on financial education. And that's really, really sad, because it's actually not just keeping young people away from an opportunity that exists. In fact, it's entrapping a lot of people that actually take the initiative and go out, but study from the wrong sources, right? So that is what I would say is one of the downsides. I do think that the only way that this can turn around is if the government actually makes crypto research, forget crypto regulation, crypto research a core part of the agenda and builds that skill set internally. Now, I have actually been tracking how the RBI thinks about this since 2014. What they often want is people who have substantial amounts of experience in the traditional fintech world, which is great. But I do feel that with crypto, because it's such an nascent technology, the age is relatively younger of people who are at the absolute edge of what's going on all the time. So there is a market regulator gap that exists, at least from my point of view, in India, in Switzerland, the US, and some of the other economies where they work closely. What happens is people from the industry go to the regulator, and people from the regulatory body come back to the industry. So there is, a shift that happens all the time, and they speak the same language, which is great. So yeah, I think that gap also needs to be solved. But broadly, I would say that this is not specific to crypto. Maybe it's taking a lot longer because, like you said, there's risk of money laundering, there's risk of capital flight. A lot of it has to do with what happened in 1991 with capital flight, right? Like it starts all the way there. But what do you say? It can only be resolved if the government prioritizes it, which I would argue that with everything else going on in the country, maybe it's being deprioritized. That's how I would think about it.
Yep. Probably I just want to add on that investor protection is about another area that we need to be worried about. A lot of small and first-time traders have actually lost a lot of capital. If you look at the amount of money which has been invested in the crypto market, which is originated from India, that's close to about 42 billion in the last 6 months is what it's been said. But specifically from a perspective of, let's say, protecting the small investor who is actually investing it in the first time. So I think what you mentioned around education is a key takeaway for me in terms of, one, educating the investors. People should know what risk they're taking, as well as a balanced approach is required for monitoring. But it again opens up a vast industry for fintechs who are actually looking at crypto analytics for monitoring from a RegTech perspective as well. Anything that you want to share on that, Joel, before we move on to Naveen?
So I think, there's a couple of themes that I have seen. One is remittance is one business that people have been trying to build on crypto using stablecoins. The other is people have been trying to build lending applications on top of stablecoins. It's largely similar to gold-based lending, where you just give your ETH or Bitcoin and you basically get an INR based line of credit. I think the third, and this is actually what I would think most people should do, is there are applications that let you do SIPs in crypto, right? So instead of putting up 10,000 rupees and saying, hey, I'll make a 5x in 2 days, they're saying I'll put 100 rupees each week, and maybe over a year that will be worth something, right? I think that the vast majority of focus has been on exchanges, especially because of their massive trading volumes. But I would think that in the next 6 months, the focus would be more on some of these applications that encourage healthy behavior among investors. Right. Regarding what you said around the $42 billion figure, I would say that some of it is related to the retail frenzy in the public markets in the last year. Right. Like, let's just take Zomato, for instance. It should have been trading around, let's say, 80 or 100 rupees, but now it's trading up 52%. What that means is there is so much FOMO in investing in these markets. People are competing without understanding, is this a overvalued company or an undervalued company? Does it fit my risk profile and trading? So I would think that it's also linked to the macro environment where people are stuck home. Some of them are trading for entertainment purposes, which is a very absurd thing to say, but that's where the market is right now.
Thanks, Joel. Naveen, I would want to look at a different aspect of this. Blockchain is not crypto and crypto is not blockchain. So specifically, there's more to DLT and distributed ledger technologies than crypto. So probably looking at it from a financial services sector perspective, as you mentioned, there are a lot of use cases, right, from exchanges, settlement, to collateral, to actually reducing the amount of cycle time for each transaction. Probably I'll just take an example of here how qualified institutional investors. So if you take that particular route in terms of placing your equity stocks, etc., the cycle time, because these are off-market transactions, used to take about anywhere between 3 to 4 days if you were to reconcile. Now that has been brought down by a global bank to about 24 hours. So that's some of the power that we are seeing of leveraging this particular technology in the broader sector. Probably Naveen, would you like to share your thoughts how you have seen a DLT being used across, let's say, trade finance or the other different areas of financial services, and how this can be regulated better, or what are the opportunities for startups, fintechs in this space?
I don't think technology needs regulation, right? Technology needs adoption, and I think willingness for people to adopt, and for which everybody is waiting that who adopts it for the first. So again, go back to about a decade and a half when internet, there used to be a distinct company who would use online, let's say, kind of a business model for certain sectors. They will be still seen as experimental. You saw a lot of people increasing valuations, and we saw the somewhere around 2000 .com burst. And finally, the real productivity happened over the last decade, right? Or 2000 onwards, especially 2005-6 onwards. So what we are talking about is as a DLT or as a distributed ledger technology, it will become a reality in the entire financial sector. The way we all know that every financial sector needs reconciliation. Every financial sector needs some sort of a settlement, some sort of a clearing. Now, the reality is in this framework, you don't need it. It is real time. It happens instantly. But it needs a big mindset change. And we have seen that every time a technology change happens, it's not about technology as much, but the people behind. Are they willing to change? Are they willing to change their ways? Are they willing to take that leap of faith and really kind of adapt it to the full extent with the newer processes? If you're going to, let's say, do the same process and use this technology, you're not going to have that benefit, right? So take an example. If in the stock market today, where still we have a T+1, and again, it is a limited hour, are we open to keep the markets open 24/7? Are we open to do a real-time settlements? Are we open for regulators to be open 24/7 for doing a vigilance? So it actually evokes fundamental questions that are we ready for it? The reality is it is already happening in crypto exchanges, even run by private entities, and smoothly, at least keeping the other issues that are already mentioned by Joel on a risk, that all remains, right? But fundamentally, from an operationality of our technologies, these are the models which are already showing very clearly that it has an efficiency, it works, this is a real time, this is a future. So I personally believe that what we are seeing and trying to find niche is not really going to be niche in about a decade. It will be all pervasive. It will become like a given. Today, having a website is not a, let's say, option. It is given. Having an app is not an option, it's given. And it keeps changing. This is what you will see. So this is where, again, opportunity for all the youngsters here who are present, that every sector that you go in and you see that you could disrupt in terms of time, distance, and the cost, and this technology can deliver that superior result, you should just go after that and probably do something about it. Because the reality is this has that advantages over everything else that's happening. The reality is also that all the exchanges, even in India, that they're running on a legacy technologies. Even the best network that we have is running on an old architecture. So the reality is that you need that change. What is today is existing, and if you're going to build on it, you're going to have unfair advantages than everybody else I mean, I call it unfair for a temporary basis till the time others really adapt to it, and eventually they would. So I would say that it is a limited advantage, or there is a specific area. I would say every walk of life, every financial services and other services, you have it. You can't just do it for the sake of technology, but you need a complete change of a process. You need a complete change of business model to adapt to it. And that's where probably the lead will be taken by the complete new set of a people, new entities. Eventually, it will be adopted by all the existing large institutions. For them, the change has a more risk. For them, the change needs more time.
Thanks for that, Naveen. I would just like to differ on one particular point, that does DLT or all of these require controls? I would say yes, coming from risk and compliance background. And I can tell you that regulators across the world are working, because technology risk, cybersecurity is something, a fundamental aspect of any
So I didn't
new
comment
technology
on that whether you
implementation.
need risk controls or not. I agree with that. In fact, I didn't comment and duplicate what Joel said. So one of the background that I have is there's a group called Blockchain Assets and Cryptocurrency Council, which is the association. In fact, it's part of IMI, which is also the
Mhm.
one which fought the case in the Supreme Court. So I'm an advisory member there. One of the work we are exactly doing that while government takes time in 2 years to look at the risk and fix it, we fully firmly believe that anything that you do in financial services has all the real risks that Joel has already talked about. And we need to do something about it, at least suo moto by the serious players as a self-regulatory environment or something, and start following those. Because if you don't, it will lead to some accidents and they are not good. So somewhere our belief is that it should be regulated. Surely it should have all the mitigations and controls. And again, that should not be on the technology per se. That should be on the risk. What you mitigate is the risk, right? Technology is only a tool which you could use to mitigate as well, which you could use to,
So
let's
we're not
say,
talking about technology here. So I was talking about the technology risk aspects. So whenever you're introducing a new technology, the
yeah,
risks which are being introduced in a system because of that need to be managed as well. So
of
there
course,
are global governments, which are actually governments across the region, be it Singapore or India. If you look at the technology risk guidelines, which are coming out from the
of
national
course,
regulators,
which
they are
exists
looking at
for
it.
for
And
internet banking, digital banking, everything, right? Every technology. There are
yes,
certain aspects. So risk remains same. Getting defrauded, somebody stealing your money. The modalities change with the technology. So actually, we are aligned on that. We are saying the
absolutely.
same thing.
Absolutely. And I brought that point up because that's another career option that a lot of people within the community here should explore as well. Because uh, I come in from an audit background. So I'm just bringing that up, saying that technology risk, cybersecurity underpins a lot of these areas. And that's another career option for a lot of people here. For example, Joel did mention about the fintech and regtech. Naveen referred to the interesting changes which are happening in the technology landscape across the entire financial services space. Probably looking at in terms of what are some of the skill sets that people will require for, let's say, getting to the industry here. That's something which would be more useful for our young friends who joined the meeting here today. Joel, probably starting off with you again. When you typically look at the fintech space in terms of what's coming up, how can, let's say, somebody who's got a very good idea in the space, let's say, approach you? How can they work with, let's say, other PE, VC firms in terms of approaching them? Any initial inputs, thoughts that you'd like to share for our young friends here?
Sure. So I think what I'm generally noticing is there's actually a theory in entrepreneurship that the easier it becomes to form a company, the quality of entrepreneurship will massively decline. And actually, you can see that at least in India, right? Like the nature of entrepreneurs that came in the 80s and 90s versus the average tech or internet entrepreneur today is substantially different. The problem that's happened, at least in the last few years, is there's been an explosion of entrepreneurs because it's also partly a lifestyle that people choose. But the downside to that is people struggle to signal value. So, every PE or VC guy is typically looking at, 50 to 70 startups in a period of 2 weeks, and they struggle to actually pick which is the one that I want to spend my time on, because everything else can scale. Human arts don't scale. So the best way that you can actually grab eyeballs is to signal the fact that you are actually putting in effort behind what you're building. So it could be, publishing research, it could be publishing user interviews, it could be recording how you're going around building the firm. And I think the one good example I have here is this guy called Rahul Mathur is likely his surname. He's building the startup called Bima Pay. He's actually made a monologue of how he's gone from day one to actually going ahead and raising, I believe, about 5 or 6 crores in the past few weeks for his startup, right? So what you want to do is put yourself out there as much as possible, because what a lot of people tend to do is they wait till they're perfect, and that is likely, in my opinion, the wrong way to do it. The second thing to do is, what do you say? There is a certain amount of research you should do, but don't go overboard with it. So either people tend to do no research at all, and they say there's this opportunity, its market potential is a couple $1 trillion, I'm going after it, or they tend to do enough research to go ahead and do a PhD in it. So I think it's like a bell curve, right? Like you want to be right in the middle, where after you have certain insights, you go ahead and speak to the market, because all of our assumptions about things could be entirely wrong as you speak to the customer, right? Like nobody thought people will get into a stranger's car and you have Uber. I'm actually in a stranger's house and you have Airbnb, right? All of these are things, if you sat in 2007 and thought, you would think that that makes no sense. But yeah, so I think research, but followed up with execution. The third thing to do is, what I feel is right now it's become so much easier to just send an email, send a DM. And what that means is, if you do it without substance, in the sense that if you just write to someone saying, hey, can I have half an hour of yours, without context or without following it up with work that you've done, that's likely going to be a straight no. Because earlier people used to respond. Now everybody's inboxes is kind of spam. So the one thing you want to do is say, hey, I'm asking you for half an hour. Here's 10 hours of my work that I've done. That, that's why you should take time to look at this. And people really respect effort. It does not matter, like who you're pinging, in fact. If they see effort, they will respond to you. So I think these are some of the very basic things I would suggest you do. I think the last bit I would say is, given your background and your experience, everybody's got a unique insight on the problems that their community has. And this is an essay called "Do Things That Don't Scale" by Paul Graham. What he says is, if you can find very sticky 100 or so customers, then just build for them. Don't look for building the thing that everybody's using, because eventually customers change their habits, right? Like what people like me are looking for is some proof of traction, because what's happening in the VC world is there's so much capital, but so few startups with actual traction, and that's why we are seeing so many startups raising so much money, because good quality startups are still rare. And yeah, that's just some general things I would say.
Thanks for that, Joel. Naveen, your views in terms of what our young friends should do to make the best out of the boom which is happening in this sector?
So I think I'm a big fan of entrepreneurship. So I think partly Joel has covered it in his last few sentences. But fundamentally, if you look at all the unicorns that have been created in the last 5 to 7 years across the digital ecosystem, whether e-commerce, whether it's payments, right? Each of these have been youngsters out of the college, first generation entrepreneur, and trying to build something which didn't exist, which was completely disruptive, right? And I think this is a perfect opportunity to use the deep techs that are existing, whether it's a blockchain, whether it's DLT, whether it is crypto, whether it is, let's say, AI, ML, combination of all of them. And like Joel said, all the points that he said, if you combine all of those, whatever you're good at it, if you just use all of this and build something that's not existing, and if you have customers using it and seeing a benefit in it, that's the most value that you could create for yourself, for the society, for the country. And one of the reasons we are very strongly advocating, again, this whole ecosystem of internet, even blockchain, DLT, as well as everything around crypto. See, our country fundamentally is built and growing on a digital assets and, let's say, technology and the talent. These are three things that we have. We may not have capital yet. We may not have, let's say, anything else as much to grow in terms of our value and a GDP. But this is what we have, and it's a proven. I mean, the success we had with our entire industry in technology and the software boom, then again followed by everything in the internet we've done, everything in payments and other fintechs we're doing. This can continuously lead, and India can become a global thought leadership hub. And we are already showing it in payments. We are already showing it in other fintechs. That could continue, which will actually create huge value for the country. And we will become with this genuine digital superpower. See, the future superpowers will be the ones who can master this digital. And we have to be one of those. And that depends on all these youngsters who are here, how they decide what they do, which areas they pick up. And ultimately, it has to be what you like. I mean, none of us, whatever we say will work unless what you're doing, you have a conviction and you like it, so that you'll spend 24/7 till it becomes successful continuously.
Thanks, Naveen. We would now like to open up for questions from the audience.
Yes.
I think Ankita.
Yes, sir.
Good evening, a very good evening, panelists. That surely was a very amusing discussion. I'm certain many of our potential investors here are very curious about crypto assets and have a lot of questions to ask. With your permission, I would like to invite our students to ask questions. All the students are requested to ask the questions using the chat box. Your questions will be taken one by one. So we have a question from Himanshu Duna. Can you please switch on your camera, Himanshu? And he wanted to ask, are aware of monsoon budget and India's crypto bill. What do you think are the regulatory framework that has been set up for a central bank digital currency? And what are your views on banning most cryptocurrency and the firms in India will be demotivational factor for Indians?
I think Naveen could take this.
Naveen?
So I think if you look at the draft bill, so first of all, it's not the final bill. It was a draft bill kind of year and a half back. It was put in. It had two clear objectives. One was to ban all the private crypto, whether you call it assets or currencies, to be kind of made available or any kind of dealings in India, and only allowing for research purpose. The second part was exactly what you said, was allowing RBI to issue a digital rupee, or let's say a central bank issued digital currency. Right? That is the attempt for the bill. Now, currently, that bill is actually under hold. I think there is a rethinking because this was based on a Subhas Gar committee, which is 3-year-old committee, and the crypto in 3 years have moved completely different leg. I mean, something which was valuing as an asset probably at a 30 scale is now probably 100 plus, and even after going down, it is around, let's say, 60, 70, and much higher probably. I mean, I'm just giving a very generic numbers, but it's extremely, the developments across the globe around this has become very big, and I think everybody understands that that needs to be reviewed. But like even Joel earlier said, that probably the government, with everything going on, is not sure what to do about it. RBI, like Siddharth said, understand all the risks, so they have bit conservative view. They're not sure whether time is right to allow it. Our belief is that banning has never solved anything in the country, right? We have seen what happens with prohibition. Reality is, you all youngsters know it's a hypocrisy. It's available everywhere. You put a you put a ban out there, but there is a gray market. It only creates criminal activity. It only creates more black economy, and you have actually don't have any control. So you lose the control. Same is the case with gambling. So we already have two examples where banning has not solved anything. On the other hand, actually, it has taken away tax revenues. It has taken away control. It has kind of kept the formal, real big players out from that industry and business to develop that. So our view is that we definitely need to regulate. And like Siddharth said, keeping in mind all the risks. And I think good part is all those risks exist in the financial sector, and we're already mitigating and managing those risks. We know the methods and mechanism to manage that. So we could actually implement those and manage those. And there are enough examples now across the globe. And again, it's not that the regulation itself is like 6 month old, 1 year old. There are countries like Japan, there are countries like US, there are also countries, let's say like Singapore, who's built interesting framework. So there are enough framework available for reference for us to choose. So our view on the private crypto is to get it regulated. Obviously, there are other questions, more complicated one, who regulates it, because the overlap is so high between SEBI and RBI, and whether they are really inclined and are equipped to handle it, or whether you need something like IFSC. I'm not sure if you've heard that name. That's an integrated regulator for a free trade zone in a gift city, which is an integrated regulator. So do we need a integrated regulator approach so that you have a one single new thought process regulating it? So that's one piece. Second piece, CBDC is extremely clear. I think I personally believe it's a complicated. They shouldn't have mixed it up. It's a clearly RBI and a government subject. We are already late. In fact, I remember during my previous organization days, we actually doing a demo and a pilot that how you could issue a digital currency and how you could real time monitor it from a central bank while it gets issued by other people. So I think that's something our country needs. In fact, if you want to drive financial inclusion today, every other payment product is like a money. It can't compete with currency. If you really issue a digital currency, it can compete with the physical currency and a cash, which is still very high in circulation. So actually, to speed that up, we need to accelerate CBDC, and irrespective of what you do with private crypto, that should have gone through. That's what we have been saying, and we believe that will go through. Of course, it has again two legs: wholesale, retail. You would have already seen news and announcement from Ravi Shankar, who's the DPS's DG, who's also mentioned that we are trying to look at something and announcing soon on the retail side. So I missed the last line, but I guess I've macro covered your answer.
Thank you so much. Yes, sir. Definitely. Yes, sir.
So
Thank
for
you so
now,
much,
it's
sir.
deferred. It will come in sometime, hopefully, with a better version of the draft.
Thank you so
And
much.
probably an interesting item for a lot of the participants here to note would be the rollout of the CBDC in China. If you look at globally, even the Bank of International Settlements, IMF, they've all come out with very interesting papers on CBDCs and the macroeconomic impact it may have. So I think those are good papers to look at, but specifically CBDC is something which the government is also looking at quite seriously. There have been internal, let's say, deliberations going on for a while. You never know when you'll get to hear soon, but I think that there's a lot of action which is happening behind the curtains as well.
Thank you so much, Siddharth, sir. Thank you so much, Naveen, sir. Thank you so much.
Thank you, sir, for answering that question. Our next question is from Dhwani Pramar. In December 2017, the RBI and Ministry of Finance issued circulars against crypto. The ministry went to the length of calling it a Ponzi scheme. And the news have always been negative from that point on. Be it the soft ban or cutting off access from bank, what do you believe lead to the change of heart now that the center of discussing cryptocurrency and regulation of official digital currency bill 2021 is ongoing budget session? What points do you think should be considered for making this potential law absolutely ironclad? This question is by Dhwani. So can you please switch on the camera?
I'm not allowed to switch on my camera. Most is disabled, right?
Yeah, sorry. So probably a portion of the question has already been answered by Naveen. Let's say right from the litigation that they had ongoing with on allowing crypto, and that's why you are actually seeing that cryptos have not been, let's say, banned completely today. So I think you have him to probably thank him for that. But probably you need to differentiate between the two. One is the crypto assets and the digital currency, which would be coming out by RBI. I think Naveen did answer that in the previous question as well. Anything that you would like to add, Naveen, to that? Or
yeah. So the initial reaction that you saw, I sometimes call the regulators and the government policymakers as the parents, and most of the entrepreneurs as the kids. So they get to become parental. Everything that a kid wants to do, this is wrong, don't do it. So that comes. And I actually also called like our one of the speaker here, students, saying that it's amusing discussion. I also called it that see it as an amusement park. So what happens in an amusement park if you go as a family, right? If you have elder members with you, you see a roller coaster which is higher G's, they will get scared. They'll say to the kids, they'll say, "Hey, don't go there. It's scary." But kids wants to go there, right? Because they can handle those G's, right? Those ups and downs. They have that appetite. They want that thrill and excitement in their life. They want to live their life to the full. So interestingly, the crypto has that kind of a variety, and it evokes that kind of a strong reactions. And I've seen continuously, while I didn't talk much about my earlier experience, which Joel mentioned about the experience of dealing from a no regulation in payments to regulation. Every time a regulator comes and they see a newer product, they usually hear more negative things because media likes to cover only negative things, not the good things. So I remember even early days, they would first say that, okay, prepaid cards have been used for money laundering, drug trafficking, exactly like Bitcoins. So how will you manage it, right? So it's the same thing. So they always talk about the risk, not that their intentions are bad. They just want to make sure all of these are covered. So they always start from there. It's always the difficult approach. It takes time to observe them. Good part is, like Siddharth mentioned, that there are mechanisms to at least keep having dialogues, discussions. At some stage when the final discussion is done, you do have a balanced view, and we hope the same here. I think rest of the answer I've given earlier.
Yeah, and the best part is there's a lot of consultation which is going on with the industry, specifically in terms of a lot of financial institutions as well as in others. And you should also be aware that RBI does have a regulatory sandbox. if there's an interesting fintech which wants to play around, or let's say showcase something of a new technology, I think that is something a lot of countries have brought up. So that's again something food for thought for you to see. If you want to develop something, there is always ways and means of, let's say, working with the not under the table, but over the table. So I think the government is encouraging a lot of let's say innovation in this space, and the sandbox which came up about a year and a half back or so is a good example of that. So you should definitely try that out for sure.
Thank you so much, sir. That was very
Thank you,
insightful.
sir. Thank you, sir, for answering. And our next question is from Manav Marwa. In future, where cryptocurrencies will replace fiat currencies, and with increasing adoption life cycle of this new crypto technology that has been witnessed recently, can we expect that crypto assets class will become big enough, like stock market, in relation to the volatility? Yeah.
So probably I'll definitely get Joel's views on this, but volatility is like a two-way sword, right? So if somebody a trader who can actually make money both ways, so that's again why you should go back to your risk management class and look at volatility smiles and value at risk and others, or look at algo trading. But that is not something that you can do even in the traditional markets as well. So in no way has this panel or anybody trying to encourage any participants here to actually look at investing, because I think only let's say knowledgeable investors can probably look at it as an alternative asset class, but not definitely as a primary asset class even today. But I'll probably ask Joel to share his thoughts. I think I just shared my two cents on let's say volatility being useful, but yeah, I'll let Joel answer that.
So can you just repeat the question, because I didn't entirely follow it. Hello.
Yes, sir, we can hear you, sir.
Yeah.
Can you please repeat the question for Joel, please?
Yes, the question is, in the future, whether cryptocurrencies will replace fiat currencies, and with increasing adoption life cycle of this new crypto technology that has been witnessed recently, can we expect that crypto assets class will become big enough in relation to volatility?
Sure. I think I can give some context. We have some historical precedent that initially these assets trade with no correlation to practically anything. And at least in the case of Bitcoin, what's happened is there is some academic research that says that it trends towards being similar to emerging markets currency over time. And then eventually it tends being more similar to the S&P 500, because a lot of the capital is, that's trading in Bitcoin comes from the S&P 500. Now, I think that said, that's the academic research. You can lose your life savings trading emerging markets currencies too. So it's not like Forex. What generally happens is, as more institutions, at least in the US, tend to trade the large cap crypto, like Bitcoin, ETH, and the like, they put crypto assets as one part of their portfolio. Now, depending on how the rest of their portfolio is performing, their appetite for risk in crypto tends to increase or decrease. So if you look at the last 1 year, right, there have been some studies that say that Bitcoin is almost entirely correlated to the S&P 500. And in certain sporadic instances, it tends to be non-correlated too. So what I'm trying to get at is, if you said, what do you say, can I trade on this information? I would say that no, that's not the only thing that you can actually trade on. And like Sir was saying, I think, in crypto, you may be better off just taking that 10,000 or 15,000 or whatever that you're looking to invest and spending that on books versus trying to make that 100x, because the ROI is so much more when you're starting off, right? Like, because I used to have the same problem when I was starting off in my career. And I do have a mental benchmark where I said, okay, if I had put all that capital into this asset, what would have been the return, and what's the return that came because I invested it into education and networking and all that. And what I've seen is consistently, when you're starting off, just invest in yourself or education. And by that, I mean, resources that help you learn or analyze, then I think the return is much higher. Because the starting capital pool you started so small, even if you make a 5x it may not meaningfully change your life as well. Yeah.
I'll just add one line to the first question that fiat currency, private cryptos, and government issues digital fiat currency will all coexist. They will not going to, let's say, supplement each other. They are all going to be coexisting at some stage. And as far as adoption is considered, it will vary country to country. Maybe India will differ basis whatever developments are taking time, but it will happen at a certain curves in across the globe in a decade. I just stop there.
Thank you, sir. Thank you for your valuable advice. Thank you, sir.
Thank you, sir. And the next question is by Chetan Doshi. When private crypto exchange are involved, we have seen that there have been issues against Bazir X last month, where the ED raised issue regarding money laundering and recently regarding the withdrawals from crypto wallet. So don't you think we need a centralized platform and exchanges where the private cryptocurrencies will be traded and center will have a good amount of regulations?
I think Siddharth is the best person to answer it from a risk perspective.
So couple of them, right? So if you look at are regulators correct in let's say talking, I'll not take specific names because it's currently being investigated or it's in a court of law. We don't want to talk or take specific names here, but specifically exchanges need to be regulated. I have personally seen cases where and how, let's say, AML, let's say, a fraud occurs in the money laundering was happening. So not in a particular exchange or so, but in the broader space, you might have heard of cases where, let's say, cryptocurrencies were used in the dark web for procuring, let's say, illicit material or others. But to the point that in terms of can we have a national exchange for private cryptos, I don't see that happening anytime soon. It'll probably be in the realm of the private sector itself, but more and more regulators as well as industry bodies will look at, let's say, self-governance, like what you have, like FINRA and others across regions in the US. So you may have where exchanges come together, they may have self-regulation. That is what Naveen was referring to. But you will have probably the government looking at it with a far more closer or a large magnifying glass to see what type of transactions are happening, just to protect the smaller investors, stop capital flight, and also, let's say, keep it regulated. And a lot of companies in India are also inquiring or looking at in terms of whether it can be an alternative asset class for them to invest in. So as the interest, let's say, comes up, you'll definitely get to hear more in this session of the Parliament, hopefully, in terms of any new regulations which are coming up. But we'll probably stick with that. But there are a lot of RegTech firms. It's a very good opportunity for youngsters like yourself or others to actually come up with solutions around monitoring crypto assets. You might have heard of CipherTrace or a lot of Chain Analytics, which has actually raised a lot of capital in last month because of whatever they've been doing. So I think that's again a good opportunity and a good space for you to explore as well. Thank you. Naveen or Joel, if you want to add on to that.
No, I think that was perfect.
Yeah. No, let's take another question.
Thank you, Siddharth. Thank you, Naveen and Naveen sir and Joel sir for your insights.
Thank you, sir. The next question is from Krishna Kumar Sharma. RBI said in statement, it's time for digital currency to counter cryptocurrency. How do you see this?
Okay.
Naveen or Joel?
Okay, I'll just say a very small gist, right? I think digital currency and cryptocurrency has entirely very different properties to it. People who typically tend to use cryptocurrency want things like what is immutability, that is the inability to reverse a transaction, or absolute decentralization and censorship resistance. So there's always going to be a market for that. Versus what a CBDC can be offering users, right? I think cryptocurrency, these things like Bitcoin, are built on principles of what is called sovereignty. So let's say your assets are yours, versus what happened in demonetization, right, where the government could come and say this is no longer your currency. You need to use an alternative. Now that's a deeply political conversation. We don't need to have that now. But what I'm getting at is there are entirely different user bases for each of these instruments, and it will continue to be that way. I think the vast majority of people will continue. If a CBDC comes, like people like my dad, for instance, he has no reason to go ahead and buy Bitcoin for transactions. Whereas me, for instance, I may want to use it because I see it as an inflationary hedge. And that is, again, another debate altogether. But I would say that for the vast majority of people, a CBDC would just serve the purpose and they may not embrace crypto at all.
Great,
So
and hopefully this was not amusing, and this was amazing. So thanks. Go ahead, Naveen. Sorry, I couldn't stop myself from making that statement. But
So I think, like Joel said, they are completely different subjects and completely different advantages and disadvantages, but impacting each other. The reality is that CBDC, when it is launched, and if it is launched with a clear roadmap for India to have a full convertibility, because without that, it's of no use. If you really want to genuinely compete, to create a digital rupee, which can also be a digital currency to do a digital trade across the globe, this is what China is attempting by their wholesale CBDC, then you need to first bring in the capital convertibility. Now, again, look at the implication. If you create a capital convertibility of a rupee, it automatically facilitates even the private cryptocurrency trades easily. So they're counterproductive. In fact, if CBDC is done, it actually helps RBI understand to manage this beast better. It actually enables a growth of even the private cryptos better, and again, de-risking it. But fundamental is actually, which is no one talking, is full capital convertibility of rupee, which we don't hear, because in absence of all of that, these are hollow issues. I mean, these are still a niche product, not going to be very rapidly adopted. You can't really take full advantages of the potential that these technologies present.
Thank you, sir. I guess we are done with the questions and we'll proceed for the vote of thanks.
And thanks for sharing your vast knowledge, Naveen, Joel, and thanks to the amazing audience as well.
Thank you.
Oh, thanks, Siddharth. You have kind of managed and mentored it, did it so well. And thanks to the entire IBS team and the students for listening to it patiently. Hoping we were amusing enough.
It was great.
Thank you, sir. On behalf of the IBS family, I wanted to thank all the three of you, Siddharth sir, Naveen and Joel sir, for finding out time from your busy schedule and interacting with our students here. Thanks a lot, sir.
Thank you. Have a great evening, everyone.
You too, sir.
Thank you. Bye.
Thank you.
Thank you, sir.
Bye.
Thank you, sir.
It is rightly
Thank you, sir.
said that,
Actually, sir, there's a vote of thanks for you all.
Yeah.
Ankita, can you please?
yes, it is rightly said that there can be no settlement of a great cause without discussion. The greatest enemy of knowledge is not an error, but inertness. All that we want is discussion, and then we are sure to do well, no matter what our blunders may be. Honorable speakers, respected teachers, and my dear friends, it's a pleasure to offer a vote of thanks on this delightful event. I, Ankita Bhosle, member of Research Club, extend my gratitude to all our speakers for sharing their proficiency on the topic of crypto assets in the Asia Pacific region with us. It was undeniably an informative and entertaining panel discussion that IBS has experienced so far. I would like to express my gratitude towards all our speakers for taking out their valuable time and giving us understandings of this topic. We appreciate having this puzzling vastness of crypto assets simplified. I would like to extend my gratitude to Professor Jyoti Tilak, Director IBS Pune, Colonel Ram Gopal, Deputy Director IBS Pune, for providing this delightful podium where we could connect with such knowledgeable professionals. I would also like to thank Professor Dr. Shraddha Gupta, mentor of Research Club, and Professor Dr. Soumya Mishra, the mentor of Research Club and student event coordinator of IBS Pune, for their persistent inspiration and support in organizing this insightful panel discussion. It was their revelation to arrange such an event for the students so they can get familiar with the crypto assets. At last, I would like to thank all the participants present here in their high spirits. You all definitely made this event a memorable one. Thank you all.
Thank you.
Thank you so much, sir.
Thank
you so much, sir. Pranav, you can end the meeting.